From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, President Biden takes a tour of electric vehicle manufacturing at a Ford plant, central to both U.S. infrastructure and America's chip-making strategy. We will talk to the woman leading the administration's fight against climate change, White House National Climate Advisor Gina McCarthy. Plus, get out your popcorn. Amazon is said to be talking about buying movie studio MGM for $9 billion. We'll have the juicy plot line in the company's efforts to bolster its streaming services. And helping artists generate audiences and revenue. Pandora co-founder Tim Westergren's newest venture, Sessions, is a music-only live performance platform. We'll have more on that, plus his outlook on the future of music streaming between Apple, Spotify, and more. Those conversations in a moment, but first, U.S. stocks ending down Tuesday as mega-cap tech shares turn negative. Our Ed Ludlow has the full picture. Ed, take it away.
Yeah, it was a real change of direction towards the end of Tuesday's session because we started quite brightly with tech stocks leading the way. Then investor psychology changes, big focus on rising inflation, on rising commodity prices, away from what happens when the economy reopens. The S&P 500 main gauge of U.S. equities took a real drop in the last 15 minutes of the session, down 0.9%. No one was spared. The tech-heavy NASDAQ 100 index also declines. And this ETF of EV and autonomous vehicle-related stocks had been significantly higher and fell away towards the end of the session. Semiconductors also involved in that sell-off. Flip up the boards. And it's interesting. I want to focus in on semiconductors. Joe Biden, in his speech, was really focused on that. He was giving fighting talk about what the United States would do. You can see we've had really choppy trading on the Philadelphia Semiconductor Index, a gauge of chip stocks over the last 3 months or so. But again, EV stocks did remain higher. There was lots of fighting talk from the president about investing in EVs, about what he can do as president to drive that advance. Tesla closing up 0.2%, and some really impressive gains in some of these SPAC EV stocks as well. Finally, coming into my Bloomberg, though, the concern from investors right now is how do you treat Tesla? Is that a tech stock or is that a car company? It's been moving in real symmetry to how the NASDAQ behaved back in the dot-com bubble. That white line is NASDAQ in the late 90s, early 2000s. The blue line is present-day Tesla. That's a very similar picture that I'm seeing on my screen, Emily. That's something that investors are now thinking about with underperformance in EV stocks. Emily.
All right, Bloomberg's Ed Ludlow there. Ed, thanks so much for that roundup. I want to turn now to climate change and the president's ambitious climate plan. President Biden has highlighted his $174 billion proposal to transform the automobile industry while on a tour of electric vehicle manufacturing at a Ford plant in Michigan. The president saying the U.S. is in a race against China to lead the global market for EVs. The visit coming amid expectations that his administration will unveil a climate finance plan on Thursday. With more on what that plan might entail, our Bloomberg Television and Bloomberg Radio audience welcomes Gina McCarthy, White House National Climate Advisor. Gina, thank you so much for joining us. Obviously, good to see the president there touring that Ford plant, looking at a battery-powered Ford F-150. Talk to us about his ambitious plan. What has the president already done, and what does he plan to do to stop or even reverse the effects of climate change?
Well, the good news about today is he spent a little bit of time in Dearborn, Michigan. He went to the Ford EV Center to really look at showing people what the newest F-150 looks like. It's electric. And it was a great opportunity for him to talk about the plans that he has in the United States for winning the future. He wants to make sure that we recognize that electric vehicles are the future and that his American Jobs Plan has all of the elements in it that will allow that future to be won by the United States of America. When he was at that Dearborn plant, he was standing with United Auto Workers, union workers who were making that plant, who were making that vehicle. And that vehicle was made with parts that were built in 20 different states in the United States of America. We're talking about batteries now being manufactured in America. You know, the president is concerned that China is far ahead of us in the electric vehicle market, and instead of producing the technologies of the future, we're importing them from somewhere else. It is time for that to shift around. So the president has an American Jobs Plan where he's looking to invest more than $170 billion, and he's going to build out the electric charging stations that we need for consumers to buy these vehicles and feel confident that they can get where they want to go and back again. He's looking at actually providing consumer rebates at the point of sale. He's looking for low-interest loans, grants, and other opportunities to work with battery manufacturing so that we steal that supply chain back to the United States again instead of ceding it to other countries. And he's looking at opportunities to continue to advance, not just in the electric vehicle sector, but in other sectors, to show that the United States, following this pandemic, we are going to not ask for sacrifice for our people. We're going to design a plan that gets our people right in the mix of the best union jobs that they can have, and we're going to grow those jobs, and we're going to grab the manufacturing sector back again right here in the United States.
The president's plan calls for $700 billion in infrastructure improvements, including the electric car charging structure, which you mentioned.
Yep.
But there is no legislation at this point moving through Congress to get the necessary funding and regulations for this plan. What is the administration doing about that?
Well, there are actually a number of pieces of legislation that looks to support parts of the American Jobs Plan. But the president really wanted to put together this $2 trillion plan to show that we are actually going to be back on track to capture the future again. He wants an investment that's right-sized for this moment, a once-in-a-generation investment, and that's what this represents. It's not only just looking at electric charging stations, it's looking at making the transmission grid system work so renewable energy is available all across the United States. It's investment in our water and our wastewater infrastructure. It's going to repair roads and bridges. It's going to look at the kind of investments in America that you expect a president to make who cares about people and knows that it's not about sacrifice, it's about hope and opportunity that this moment brings. And he's going to capture it. So you're absolutely right. There's numbers of pieces of legislation over there that have not passed, but he's sitting even today. We have folks sitting together, Democrats and Republicans, looking at what we can put together in a bipartisan way to move this plan forward. But this president has made it very clear that this plan needs to be bold, it needs to be big, and it needs to meet this moment in time.
But if Republicans were a bit sort of not that excited about the jobs plan, the reaction was a bit muted. At what point then does the president move forward with Democrats in the majority with his plan?
Well, the point is not now. The point right now is to work with Republicans as best we can, and then the president will make a decision on what to do next. But I think we all know that President Biden has been in office for a long time, working across the aisle. He's hoping to do that once again, but he's not going to wait forever. He knows that this is a moment in time when we have to invest. And he's looking at everything from investments in broadband. I mean, the traditional views of investment just don't work anymore. Our country needs to grab back the future for ourselves, to build some strong union, good-paying jobs. We've lost more than 22 million jobs over the course of this pandemic. The president's not going to ask for sacrifice. He's going to invest in the American people. That's what this is all about, and that's why he's so anxious to get it moving forward.
Now, less gasoline means less gas tax. And I wonder, would you consider a per mile tax on electric cars to cover all of this new mileage that will be covered by a mass electric fleet?
Well, thankfully, that's not within my bailiwick. We'll all decide how to make sure that we get the resources we need for states to actually maintain their roads and bridges. Right now, the federal government, through this president's leadership, is looking at re-energizing our ability to actually fix those old roads and bridges. And I'm sure there'll be discussion at the state level about how to support that moving forward. But right now, the goal is to look at the terrific technologies we have available in the transportation sector, to invest in transit again, to get rid of those dirty buses, especially school buses, to take a look at how we get those old diesel trucks off the road, and yes, to build an electric vehicle infrastructure so that we can capture that market.
Okay. Now, speaking of electric cars, Elon Musk, who of course is the CEO of Tesla, has been very vocal about the energy consumption of Bitcoin mining, though he has and Tesla has invested in Bitcoin itself. Are you concerned about the energy consumed by crypto mining, given how much the market has exploded? And are you thinking about this from a policy perspective?
Of course, we're thinking about every sort of energy consumption that we have in the United States, because we need to, right now, this decade, invest in how to turn that around. We do have a climate crisis that we owe it to our children to tackle. And so you're right to look at every opportunity that we can to actually reduce those greenhouse gas emissions. Now, I won't speak specifically to that issue at hand, but I will say that we're looking at how to look at every sector of our economy and meet our commitment that we made to the international community when we rejoined Paris, which is how we can cut our greenhouse gas emissions in half by 2030. And that's a task that we're taking seriously. We've looked at every sector, including the mining sector, the oil and gas sector. We looked at our transportation sector. We'll looked at housing and how we can move forward. And the good news is that we have tremendous opportunities for deployment of already existing technology that can help us get that reduction that we so desperately need to show the world that we are back in action in the United States. We're going to provide international leadership. But there is no doubt that the challenge of climate change is big, and fixing it is going to take investments. And that's why the president is out in front and hoping to move forward that with this level of investment that will get us some reductions this decade, which we need, and then we'll move forward with research and development on innovative technologies that can get us over the finish line by 2050.
All right. Well, on behalf of our Bloomberg TV and radio audiences, thank you so much. Gina McCarthy there, White House National Climate Advisor, joining us from the White House. Coming up, WeWork's executive chair says the traditional office is dead. Marcelo Claure joins us next with Bloomberg's Ed Hammond. This is Bloomberg. Are 20-year office leases and the traditional headquarters a thing of the past? WeWork certainly thinks so. Its executive chair, Marcelo Claure, told Bloomberg's Ed Hammond the traditional office is dead. They spoke earlier. Take a listen.
Companies are not looking forward to going back to the traditional way of signing a 20-year lease and setting up this non-flexible headquarters. That's dead. The office is very different today. You know, the biggest or most of our larger customers are the world's most valuable companies who basically are sending us their employees because they don't know, how many days they're going to be working, because they don't know where their business is going to grow. And when you're sitting in the only company in the world that has over 1,000 buildings in pretty much most important cities around the world, the demand for WeWork space today is higher than it was prior to the pandemic. So what the pandemic allowed, WeWork allowed to reinvent itself. It allowed to learn how to operate on a most cost-flexible basis. And now you have a WeWork that, like I said before, WeWork should be a profitable company by the end of this year or by the beginning of next year is latest. And demand for this type of flexible office space is higher than ever. And I think the world is going to redefine in terms of where flexibility becomes the most important part that a company can offer its employees.
I got to go there with the crypto question. Obviously, WeWork last month announced that it would be accepting payment in the form of cryptocurrencies, notably Bitcoin. It also said it would hold some on its balance sheet. Today, we saw Elon Musk come out and say Tesla would no longer be taking Bitcoin over concerns about the impact it has on the environment. Obviously, the environmental impact of mining Bitcoin has gone up significantly over the past few months. Is that the right move? Is that something we're likely to see WeWork follow, or is that just a sort of a reaction to a short-term trend?
No, I mean, the reason why we decided to accept cryptocurrencies was because our customers were asking for it. One of the things that we do with Sandeep is we listen to our customers a lot, and we have to, right? They tell us the type of office they're looking. They tell us the type of setups that they want. And the crypto word came out a lot where employees say, we would like to pay you in crypto. We have accumulated a significant amount of wealth in crypto that we would like to use it to pay for rent, as rent becomes an important part of many companies. So we decided to basically accept crypto. And at the same time, as people pay us in crypto, to us, it's just another currency. It's like we're holding to, we have US dollars, we got euros, we got pounds, we got crypto, we got Japanese yens, we got, so to us, it makes no difference. And when our customers ask for reimbursement in crypto, we pay in crypto. And we have, we've had some of our customers who are paying us in cryptocurrencies. And we have some landlords who said, look, I would like you to pay me in cryptocurrencies. So, the way WeWork looks at it is, we're going to listen to what our customers want from us. And if they demanded that they wanted to pay in crypto, that's why we took crypto as a form of payment.
That was SoftBank COO and WeWork Executive Chair Marcelo Clare speaking earlier with Bloomberg's Ed Hemmon. And we'll have much more of Bloomberg technology to come. You don't want to miss it. More next. This is Bloomberg. A few stories we continue to watch. More than 200 companies in the U.S. have announced this year they have to restate past financial statements. More than 170 of them are SPACs, or companies that went public through special purpose acquisition vehicles. They were tripped up by the SEC. The agency warned SPACs in April that they were incorrectly accounting for certain types of warrants they issue to entice investors, and that change has halted the surging SPAC market. Fidelity is looking to attract the next generation of investors. The firm is unveiling a new type of account aimed at 13 to 17-year-olds. It'll allow them to save, spend, and invest their money. Teenagers will be able to make their own trades on Fidelity's mobile app with zero accounting fees. Still, they would have to have a parent or a guardian who also invests with the firm. And speaking of young investors and going public, Robinhood could reveal filings for a planned IPO as soon as next week. This according to sources who say the trading app could be targeting a listing as soon as June. The news comes on the same day that some Robinhood users' most popular asset classes are on the move. For more, I want to bring in our Ed Ledlow. Ed, what are we going to learn potentially about Robinhood next week?
Yeah, it's the first look under the hood. When you get a listing like this, it's the first opportunity for public market investors to look at the reality of the company. What are the company's financials in particular? In other words, how much money is it actually making? How much money is it actually losing? I'm not drawing a complete comparison, but think back to WeWork, which is a company we've been discussing a lot recently, right? When WeWork came out with this equivalent filing some time ago now, the investment community was shocked at what they found. I'm not saying that will be the case with Robinhood, but it is a reality check. There's been so much around Robinhood, especially around deal flow. Remember, that's revenue that Robinhood generates by passing on transactions or trades to brokers like Citadel Securities. People were really surprised to learn that that was such a significant portion of the money that it brings in. So you really learn about the company, and from that point, you make a decision about whether you want to buy in.
Yet again in so-called meme stocks, from GameStop to AMC. I mean, are meme stocks back?
The retail traders certainly seem to be back. We knew that there was data in the first 3 months of the year that retail traders were accounting for almost a quarter of market activity. But once again, we looked to Twitter. There was a hashtag squeeze AMC going on across Monday and Tuesday in the markets. There was also news of a big block trade, 17 million shares of AMC, slightly higher than where they were currently trading at. That gave a lot of excitement. What's interesting is the discrepancy you see there on your screen between AMC Entertainment, which was up for 8 straight sessions, and GameStop, which had more muted gains and much more on the day and much more wild swings in recent sessions. There is no really hard reason or rhyme for what's going on, but the one commonality between them is that the so-called Reddit traders, the retail investors, the drivers of these meme stocks have come back into the market, and they're the same investors that were looking at cryptocurrencies.
So, Ed, talk to us a little more then about what's going on in the crypto market, because it's been a roller coaster. I asked the White House National Climate Advisor if she's concerned about energy consumption of crypto mining in particular, which of course Elon Musk has spoken out about, catalyzing this wave of tweets and back and forth, and many people in the crypto community not very happy with what he is saying. A lot of innuendo in terms of whether he sold his Tesla's Bitcoin or not. Talk to us about the movement, what we know, and what we're seeing.
Yeah, I mean, in Bitcoin in particular, it's still very much a news and sentiment-driven asset class, if you want to call it an asset class. The latest news is that China's central bank, the PBOC, was pretty firm. Cryptocurrencies, in particular Bitcoin, are not official forms of payment. And when you have such a big player in world financial markets like the PBOC come in and clamp down on cryptocurrency, it definitely impacts sentiment. The other big thing in the markets over the last 48 hours is Elon Musk's tweets. And you have a number of strategists and Wall Street analysts saying, as long as Elon Musk keeps impacting the market with tweets in one direction or another, even though he has thrown his own weight behind Bitcoin and Dogecoin and other cryptocurrencies, it's going to keep those legacy institutional investors on the sidelines. And for as long as those big banks, those big asset managers are not involved in cryptocurrencies, we'll continue to see that volatility. So that's really what it boils down to. It's news cycle and how vulnerable swings are to what we see in the news, but also this kind of volatility keeping big players a bit too cautious to wade in.
Well, and if one thing is for sure, it's that the swings will continue. Coinbase President and COO Emily Choi said, buckle up, welcome to crypto, in our last chat. Bloomberg's Ed Ludlow, thanks so much for breaking that all down for us. Appreciate it. All right, coming up, after a year of chaos, Google is trying to move on to a new normal. We're going to go through the announcements made at its virtual I/O conference this year and how the company plans to double down on health tools and AI next. This is Bloomberg.
Pandemic has brought us together in a shared experience for more than a year. But now we are seeing that common experience diverge. In some places, people are beginning to live their lives again as cases decline. Other places like Brazil and my home country of India are going through their most difficult moments yet.
Alphabet CEO Sundar Pichai there talking at the company's virtual 2021 Google I/O annual developers conference. The company announced a new look for Android 12, more privacy features, and a partnership with Shopify. Google is also betting big on quantum computing, AI, and new health features. And after a year when so many people turned to Google amid the pandemic to search everything from COVID-19 symptoms to vaccination locations, getting the right information to users became a central part of its strategy. Earlier, I sat down with Google's Chief Health Officer, Dr. Karen DeSalvo, and asked her about Google's responsibility to amplify correct information.
It's such an important responsibility, not only in pandemic, but other times as well. Certainly throughout the course of the pandemic, we have seen people coming to us asking questions about COVID, about testing, about vaccines, where to get care. And so we consider that an opportunity to get the right information, right time to people to save lives, and do that in partnership with public health authorities like the World Health Organization or the CDC, just as you say, to make sure we can amplify their important public health messages, because they're trying to push that out, but people are coming to us and trying to pull information. And so we see that we can help, meet that information with people when they're looking for it and make sure it's the highest quality possible.
You joined Google in 2019 as Chief Health Officer, which was before the pandemic. How has the pandemic changed the size and scope of your role?
Yeah, I joined in December of 19, and we were already starting to see some cases later that month in parts of Asia where we have offices, but really, like most of the world, it was in late January and in February when we began to realize that we had to sometimes, as I say, put down our pencils and turn our attention to the really critical things that were facing the world, and knowing that people were going to come to search to ask questions about coronavirus, work with WHO, the CDC, others to get their information front and center. And if you think about it, even back then, we were just learning about how important it was to wash our hands. We were learning about what flattening the curve was. So as a public health person, I really just was grateful that I could be here at this time to help make sure that people were getting the right information. Because boy, in any crisis, including a pandemic, communication is job one, so people know how to protect themselves and how to protect their community. So we've been very focused on the pandemic, though also making sure that we're not losing track on the other important work we want to do globally to improve people's health.
Now, the return to office debate is still ongoing. It seemed like Google was initially going to take a more traditional approach, ask employees to come back to the office, but now the company has come out and saying, yes, some people can work remotely for the longer term. Why the change? How did Google come to this decision?
Well, as you say, very early in the pandemic, we saw that we needed to be a part of this flattening the curve opportunity, that we needed to make sure that everything we could do, if we should, in order to not be a link in the chain of transmission. And so we went to work from home early. We've learned that we can do that, and that every way that it's possible for us to be conservative going back in the office, that we should. But we've also learned that it's important for us to try new ways of working. So as we think about the future of work, we want to be as inventive and creative as we have been in the prior iterations of work. I mean, creating really incredible campuses that lend themselves to creativity and innovation and collaboration. So we want to make sure we have that kind of environment for our workforce that will thrive and need that kind of space, but also wanting to learn to understand what does this future look like, and how does technology enable companies like ours and others to continue to be successful in the kinds of products and services and research work that they want to do. So we're on a journey, like many other companies, to see that we're doing right by our employees, make sure that we can do the work that we need to get done, but do it not only safely, but in a way that is really going to promote well-being for all of our employees.
Is Google going to ensure or require that all employees get vaccinated?
We are doing everything we can to get our employees and our extended workforce vaccinated, and dependents as well. So that includes standing up sites for vaccination, partnering with others to get that done all over the world. Very much encouraging Googlers to get vaccinated, again, in the Google community as well, all around the world. Right now, we're not in a place where we want to require that to go back in the office. We think that there's still enough momentum that there are people who want to get vaccinated in places like the US. There's supply, recognizing though, of course, right, that not every place in the world there's enough supply to meet demand. So we're just, again, trying to carry along on this journey and encourage, not requiring, but we're just making sure that we're doing everything we can to, as we say in Silicon Valley, reduce the friction. So it's easy enough to get a vaccine and try to help be a part of, again, the big community solution. How do we help as many people get vaccinated as possible?
Meantime, at I/O, you have unveiled this new AI-powered dermatology tool. Tell us a little bit more about how it works and why this was a priority.
I'm so excited about this tool. I'm a primary care physician, and so for the decades of practice, people come into clinic or call me on the phone and say, I've got this thing and I don't know what it is. And I'm a great internist. I'm not a dermatologist, right? So I also often need to refer people to derm. This is just a wonderful tool that my patients could use to understand what is the potential conditions that they have, And then when they come into the office environment or when they call me, they're just much more prepared for a conversation because they've been able to do some additional research, and that just makes always for a much better engagement with my patient. So I love that it's, an AI tool that can generate this list of derm conditions. I especially love that it's, for consumers to empower and engage and give them a sense of agency so that they have that knowledge moving forward. And I love that it's a light tool that is available from the browser. Basically, it turns your smartphone or computer into the device, if you will, to be able to understand. It's not something extra that you have to get. So I'm excited about the potential. I think it's clearly something people are interested in getting more knowledge about derm conditions. And so we just see this as a great way to be helpful when people are coming and searching on that kind of information, and give them more of that relevant, authoritative content so they can make better decisions for themselves.
Google Chief Health Officer there, Dr. Karen DeSalvo. Meantime, Apple is preparing to release several new Mac laptops and desktops. Bloomberg has learned they will have faster processors, new designs, and improved connectivity to external devices. That will accelerate Apple's effort to replace Intel chips with its own. Coming up, he co-founded the music streaming platform Pandora, kicking off a sea change in how we listen to music. Now, Tim Westergren is on to his next thing, disrupting live streaming and help rising artists make a sustainable living. He'll tell us just how he's planning to do that next. This is Bloomberg. Pandora co-founder Tim Westergren has unfinished business. After changing the face of radio and streaming with Pandora, he is hoping to achieve what Pandora couldn't with a new venture, a business model that generates meaningful income for artists. His live streaming platform Sessions launched in April of last year, just after the pandemic hit the US, and now some musicians are earning up to $20,000 for a single performance. Joining us now to talk about how it all works, Tim Westergren himself, and how he hopes it'll compete with the likes of Apple Music and Spotify. Tim, great to have you back. Talk to us about how your experience founding and running Pandora, all of the ups and downs, brought you to this.
Yeah, there were many ups and downs, lots of learnings over those years. I guess I'd say this, I had the experience of working in a large consumer product that it was beloved by consumers, that had a huge artist population, had its tentacles all across the industry. And I've learned really about that whole ecosystem deeply, including the economic structure that artists exist under. And I think that that whole experience left me, one, with an understanding of where artists sit in this whole system. And the sad truth of it all is that in spite of a lot of successful businesses being built, artists have not walked away with good compensation.
So talk to us about how Sessions work. I understand it initially started as a music mobile game, but now it is more of a live streaming platform that enables musicians to connect with fans directly. Walk us through that.
Yeah, it's very interesting that this whole concept is a marriage of two discrete disciplines. On the one hand is music, on the other hand is gaming. And it's the perspective of both of those combined that actually led to this product. And in particular, within gaming, the genius of gaming is the ability to create revenue from ephemeral products, sort of the virtual economy, getting people to spend money on virtual goods and services. And the team spent 10, 12 years honing those skills. And of course, I come from music. And what we found, I think, is this intersection where you take a live performance, which is an artist's most valuable asset, and you marry it with great gamification. And we're seeing artists earn, consistent enduring income by leveraging all kind of the most advanced techniques of virtual gaming. So it's really the blend of the two that makes it work.
Now, you launched just after the pandemic hit. Talk to us about the demand you've seen and how you expect demand to continue when we come out of the pandemic and, conceivably artists can have live concerts once again in person.
Yeah, so this idea was hatched long before COVID was even known. So this really predates all that. But it's true that, of course, COVID was a huge awareness raising thing for us, for this industry. It brought a lot of people to live streaming as consumers, and artists as well, I think, found themselves stranded and looking for some outlet to play. So it put a lot of wind in our sails and definitely accelerated adoption. We do think that this will be a robust and important part of the music industry post-COVID as well. And we're already seeing that. We're doing what we call hybrid shows where artists are playing live. And surrounding that with gamification again. Artists are sometimes doubling the income they make from a live show by doing those two things. And we anticipate that this is going to be a broadly used technique going forward for musicians generally.
So let's talk about how Sessions is helping artists make money. As I understand it, younger amateur musicians can make as much as $700 an hour. Somebody who's more well-known can earn $20,000 for a single performance. How does that compare to Apple Music or Spotify or SoundCloud?
Yeah, so I know something about this, because I've been at it for a while, and I can tell you that I've never seen a place where artists can make this kind of compensation. And not just well-known artists, but artists that have no fans. And we started the service with a handful of a couple hundred artists that had no fans from all over the world. And within months, many of them are making really livable income just from their revenue on sessions. And established artists are making hundreds of thousands, actually. It's over $500,000 in a single show. So it's serving artists across a spectrum. I think there are two things that make that possible. One is this gamification, this virtual economy that happens during the performance. And the other thing is a growth engine, which is something this company developed about 15 years ago, which enables us to bring people, audiences to these shows. So we actually spend our own marketing dollars to attract fans to every show that streams on Sessions. And so these are well-attended shows, which is really, frankly, the other great problem that live streaming has had and it continues to have, which is there are lots of platforms with tools and capabilities, but they're not bringing fans. So these shows are like trees falling in a forest. And I think Sessions is solving that. And I mean, for me, this is incredibly exciting because I see in this the potential for the global musicians middle class, which is something I've dreamed about for a long time.
Now, you've been really open about your time at Pandora. You've said in the past that Pandora broke your heart. And I know that artists not getting compensated enough was part of that. When you look at the streaming music industry today, when you look at Apple Music and Spotify, do you see something that's broken, and what is broken about it?
Yeah, so if you step back to 30,000 feet, what I see is this. I see a small handful of companies that have built a lot of value, very successful companies using content, music, and they're valuable public companies. And a small cadre of artists have also done well by those companies. But by and large, the vast majority of musicians whose music powers them have not been properly compensated. And unfortunately, I include Pandora in this now too. It's and kind of in some ways through no fault of its own, Pandora's business structure didn't allow it. But artists right now are renting their audiences and they're earning their income through other people's businesses. So as a share of advertising revenue, as a share of subscription revenue, they don't have a direct relationship to a fan. They don't have direct ownership of their actual business. And they literally rent their fans from Facebook and Instagram and the like. And I think that needs to change. Artists need to recapture their audiences for this to work. And again, that's at the center of what Sessions is trying to do. I think part of the problem is that music is getting commoditized. In fact, it's getting anonymized, I'd say. You've got these services that have millions of artists, millions of tracks that exist primarily as songs in a playlist. And the artist really doesn't have much of a presence and certainly doesn't have a direct relationship to their fans. So I think it's almost as Orwellian future ahead of us where artists are kind of they're like cogs in a wheel, invisible to the audience. And again, I think this is what the great potential live streaming has here, because you're a person in front of a crowd in real time, in 3D, a living, breathing human being playing and having a relationship with the people watching you, just like a busker does on a street corner. And this is a way, I think, for artists to return to that, to have that connection, that connection that happens when the fan watches you for 5 minutes and drops a $5 bill in your guitar case. You meet their eyes and they acknowledge you and vice versa. That's what's being taken away by digital. And live streaming, I think, can bring that back.
Do you think companies like Apple and Spotify have too much power in the music industry?
Well, I'm not sure I would abstractly say they have too much power. I think ultimately what matters is how are the spoils of the business distributed. And for this to work in the long run for everybody, frankly, including those large companies, it needs to work for musicians. This won't work if the professional music becomes a hobby. It works if artists can thrive and dedicate themselves to music full time so they can make great art. And so I think somehow this sort of ecosystem has to restructure to where artists have that kind of ownership and that kind of income. And I'm going to say this many times, I think live streaming is a place that can happen because I actually think fans are looking for this too. I mean, music is not wallpaper. And it feels like that on some of these services. And I think fans, they crave this connection and live streaming can provide that for them.
Very eloquently put there. Tim Westergren, co-founder of Pandora and now Sessions. We'll keep our eye on Sessions. Thanks so much for joining us.
Thanks, Sam. Good to see you.
Today. All right, still ahead. More media deals potentially on the horizon. Amazon said to be in talks to buy the James Bond movie company, MGM. All the latest details next. This is Bloomberg. Bloomberg has learned Amazon is in talks to buy the James Bond movie company MGM Studios. Amazon proposing a bid of about $9 billion, which would add to the rush of streaming deals that are set to make 2021 a record year for media takeovers and mergers. For more, let's bring in our Bloomberg Entertainment reporter, Kelly Gilbaum. Kelly, what do we know about this, and is it going to happen?
Yeah, thanks, Emily. So what we know is that they have been in discussions. MGM has been on the block for a while. It started a sales process late last year. It's been talking to a lot of potential bidders, and this is the furthest along that it's actually gotten with another company. It seems real, it seems possible, but you never know until you know. And I think it's just a real reflection of where we're at in the streaming wars and the fact that content is such king. And if you're going to compete with the Netflix and the Disney Pluses of the world that are spending tens of billions of dollars on content, you're going to want to get your hands on a great library of titles that are really high quality and that people know.
So what does MGM bring to the table? Of course, it's a historic studio and that's done a lot more than just James Bond.
Yeah, well, it's got 4,000 movie titles. Among those, I think it's dozens, if not over 100 Best Picture winners over, this past century. So it's got this great slate. It's also got some great TV shows and like Survivor and great reality programming, things that people are going to be familiar with that are going to go toe to toe with something like, what this new Warner Media Discovery tie-up is going to be offering customers with Friends and other sort of nostalgic titles.
And quickly, does MGM want Amazon as an owner? What's your sense of that?
I think MGM is definitely ready to get into the tech space. One of the things that was really interesting last year as they were coping with the pandemic is they tried to sell their latest James Bond movie, No Time to Die, to a streaming service to actually debut online, even though for decades it's been so committed to theatrical. That deal didn't work out, but I think this sales process was definitely about drumming up the interest of the tech companies and making that bigger move into streaming.
All right, Kelly Gilblom, we're going to keep our eye on this one. Thanks so much for your reporting on this, Kelly. We'll see what happens. And that does it for this edition of Bloomberg Technology. Coming up on the show tomorrow, we're going to devote the second half of our show to one of the most watched CEOs in the semiconductor industry, and that is AMD's Lisa Su. Catch my latest Bloomberg Studio 1.0 that'll be airing here 5:30 p.m. Eastern and 9:30 p.m. on Bloomberg Television. You don't want to miss it. This is Bloomberg.